AI is taking over, and I don't want to miss out on this crazy bull run. Now, there's no denying that AI has done really well in the last couple of years, but I think we have another decade of this run continuing. Now, hear me out. AI is utilized in almost every person's day to day life now, not just through ChatGPT, but through the businesses we associate with, through the things that we buy, through our phones, through our computers. It comes stock on so many devices now. And again, I think it's just going to continue. Now, there's a number of ways we can capitalize on this, but in this video, I'm going to do a breakdown on some of the most popular AI ETFs. Some new, some old, some growth, some income, but a primary focus on just making money in this AI sector. So if you like to make money, don't forget to like the video and to subscribe so you don't miss out on future free content. Let's roll that intro. I'm going to start by saying I am relatively unbiased as I don't hold any of these ETFs, but I am looking for one to add to my portfolio, hence this video. Now, what we can see, there are 6. I'm on US News and we're seeing their 6 best AI ETFs to buy for 2025. It's a little bit of an old article, but I've been tracking the performance of these ETFs, and some of them are newer. So I'm really curious what you guys think. Starting off, I want to talk about the expense ratios of each, as you can see, because it is pretty pricey. We have BOTZ, the Global X Robotics and Artificial Intelligence ETF BOTS Z. It's a 0.68% expense ratio. Pretty high, I will say. These ETFs, I want to remind everybody that the expense ratios, the management fees, that's how these issuers make their money. So yes, it's great if their ETFs do well, but they're making money off of us holding these ETFs. So remember, you are paying for the ETF. So they better perform at least to the bare minimum of what you'll accept to pay these managers these fees. Then we have Roundhill's Generative AI and Technology ETF, ticker CHAT. I like this one a lot, but again, an even higher expense ratio of 0.75%. We have VistaShares Artificial Intelligence Supercycle ETF, AIS. This one, same expense ratio as the prior. It is 0.75%, but it's been doing really well. Then we have the Tortoise AI Infrastructure ETF, ticker TCAI, a 0.65% expense ratio, one of the lowest that we've seen. Then we have the Crane Shares Artificial Intelligence and Tech ETF, AGIX, 0.99% of an expense ratio, the highest that we've seen, so it better perform really well. And last but not least, we have our income ETF with AI. We have AIPI. This is the Rex AI Equity Premium Income ETF with an expense ratio of 0.65%. Now, I find this to be really funny that this ETF is the only income one that we've seen, and it is the lowest expense ratio that we've seen, tied with TCAI, because typically those income ETFs have higher expense ratios because there's more work on the back end to write the options and all that good stuff. So it's very interesting, but I want to know also what you guys think of AI. Is AI, are we seeing a boom? Are we going to see it slow down? There's a number of other sectors I'm investing in related to AI that I think are going to make really good videos as well. So you can expect a semiconductor one, because although it's less hyped up than AI, semiconductors are utilized in all things computing, whether it be quantum computing or just at-home computing. We need semiconductors, and I think it's a little bit underrated, but that's for another video. I am really curious how these AI ETFs have been performing, and it's really interesting that we've seen such a crazy boom, but will it continue? You already know my opinion, so let's jump into these ETFs and see the performance. I added one more. I included AIQ, which is the Global X Artificial Intelligence and Tech ETF, has a similar expense ratio, but it is the largest ETF focused on AI with 5.3 billion in AUM. If you don't know, AUM is assets under management, basically the amount of money invested in each fund. And I include it because usually larger funds have a little bit more stability, especially when it comes to, the net asset value. They're usually increasing a little bit better, maybe a little bit slower, but overall safer, less risk because there's more money invested in them. And especially when you're not writing options on them, it doesn't make as much of a difference, but it just gives you more, I guess, verification of the fund because there's a lot more money invested. Even if it doesn't mean that there's more people invested, just more money, it all depends. We have AIS, the VistaShares fund with 60 million AUM. AIQ has that 5.3 billion. BOTS has nearly 3 billion. Chat has 722 million. TCAI is the smallest that we're looking at today at 6 million. AGIX has 77.5 million, and AIPI has almost 360 million. That one's going to change. Right now, it is showcasing as the worst performer, but that's because we're not including dividends. We're looking at price return. At the end, I'll flip that, and we'll see actually how it has been performing with total return. So on the 1 month, some pretty impressive returns so far. The best performer on the month being AIS, up 17.32%. And right behind it, we have Chat with 16.26%. I'm also using Seeking Alpha's fund comparison tool. It's really useful. And you can use my link down below to get Seeking Alpha Premium and whatnot. It's cool. Anyways, back into the video. Now we can also see, if I zoom out, we go 6 months. Most of these funds have been trading. It looks like all of them have been trading for at least 6 months. The problem with this tool is it doesn't showcase the start date for a lot of them. You can see it on the chart, but when you start zooming out too far, you'll lose that. So these have been trading for 6 months by the look of it. And the best performer during that time is Chat by a pretty significant margin. It is up 63.53%. AIS is in second with 45%. AGIX is in third with 44%, and the rest dwindled down. Now, when I flip this to total return, we can see that AIPI jumps from last place to third to last, but it is a nice jump. You go from a very insignificant return to a pretty solid return. And we can actually see our lowest is TCAI, which makes sense. This one has not been around for the full 6 months. It's relatively new, started trading in August of this year. And that's probably why it is the lowest AUM as well. So we'll be watching that one, but it's not fair to really compare it to a lot of the other ones, simply because it hasn't had the full time to trade. Now, one thing we are going to do, we're going to choose one winner, and we'll go through and look at the holdings of that ETF. The reasoning behind that is it was very unique. I went through and I looked at a lot of the holdings of these ETFs, and it's different than I anticipated. It's heavy on tech as well as AI. So it's not just a bunch of smaller AI companies. You have companies like NVIDIA, like Microsoft, like PLTR that are big names in, the stock market, in investing, in tech, in AI. And then, of course, things like NVIDIA, if I didn't already say that. So it's interesting. It's not, Google's in there as well, which is very, very different than what I would have thought. But it's making money, and those funds are doing well, as we can see. So we can actually jump to a full year. And when we're looking at total return in a year, we do see that TCAI hasn't traded for the full year, and neither has AIS. Looks like the other 5 have traded since that date. So we're not going to compare them because they haven't had as much time to trade, but AIS has been doing well since launch. Now, on the 1 year, we can see Chat is up nearly 70%. AGIX in second with 50%, but that's a significant margin. 70% to 50%, a 20% difference in the same time span. So is Chat the best? If we zoom out, well, actually, we'll do this is total return. So we are including AIPI, which is up 22.5%. I will say these income funds like AIPI, FEPI, CEPI by, I think it's Rex shares, they are going to underperform growth. Typically, it's kind of how they're formatted. They're not meant to outperform the underlying. So I'm not surprised by that by any means. When we zoom out to the 3-year, let's see what our best performer is. Now, going back to the beginning, the only 2 we had at the beginning were AIQ and BOTZ. And those are not even the best performers. AIQ it's up 137%, but Chat has actually come really close in second place, although it started trading months after, nearly over half a year after. So we have kind of 2 winners. AIQ is the best performer, but Chat has better performance in a shorter amount of time. So we're going to go with Chat. We're going to look at what is in this fund, what makes it stand out, the holdings, of course, and see exactly what Roundhill has been doing to make this fund so profitable. So I went on the Roundhill website and I pulled up the fact sheet for Chat. It's a New York Stock Exchange traded ETF. The expense ratio, like we talked about, 0.75%, a little bit high, but it is one of the best performing AI ETFs. Now, number of holdings is 36. It does not hold a lot of companies. It has some really big names as the main holdings, which we're going to take a look at. But you can see why you would choose this. It's AI tools, platform significantly boosting enterprise productivity, efficiency, and decision-making, has economic impact. This is kind of what they're saying, why they're pushing this ETF. Some of the main talking points, it's enhancing business productivity, and OpenAI's ChatGPT has become the fastest applications of all to surpass 100 million users, which was absolutely astounding. I love ChatGPT. I use it for a lot of things. It's a little bit scary how much it knows and what it can do, but I'll wait until robots are knocking at my door to really start freaking out. Hopefully not. So we can see the market cap. It has large cap is 96%, so 10 billion plus. Mid cap 2 to 10 billion, 4%, and small cap less than a percentage at 0.62%. It's really interesting. So it's really just a holding of a lot of large companies that also are involved in AI. So the top 10 holdings, we have NVIDIA. Everyone knows it. It's huge in the AI space. And for a number of reasons. They were actually halted from buying certain companies from like the Monopoly Act or ruling saying that they couldn't own, the entire AI sector. So what they did was instead of buying out those companies, they invested in them, which is very smart to do. So they have large number of investments in all these smaller AI startups and whatnot. Some not startups, some just full-blown companies that they believe in the long run will do really well. We have Alphabet or Google. Common would expect something like this. We have Palantir, we have Microsoft. Microsoft has been pushing into the AI world for a number of things, for like not a call centers, stuff like that, like those automated agents that when you go to a website says, "Hey, how can I help you?" It's pretty crazy what they're able to do now. We have Oracle, which is like a cloud-based service. They have storage and whatnot. Arista Networks, Meta, everyone knows Meta. Alibaba, which is kind of like the Amazon of China. I've invested in Baba before. I never got back into it, but there's a lot of political stuff that goes into that when you are investing out of country. And Baba, although it has done really well, I kind of missed out on that run. We have Nebius Group. I'm not familiar with that one. And we have Tencent Holdings, which is another Chinese company. Which is really interesting. I believe it's a Chinese company. So, sector breakdown, we have infotech, communication services, and consumer discretionary, mainly in China. The US being first, 66%, 14% in China, Taiwan, Japan, Netherlands, Britain, South Korea. So you can go through and look at where you're putting your money. So by holding chat, you are investing overseas. Not a huge percentage, probably close to 40, 35%. But you are investing overseas, which I think is really useful. You can also see everything, all the investment such info, the risks, blah, blah, blah. Stuff that I don't want to dive too into because it's a little bit boring. But it's important to know there is risk with these ETFs, of course. So is chat what I'm going to buy? It's really speaking to me now. I also like AIS by VistaShares, another really solid returning ETF. So it's probably going to be between these two. But let me know. What do you guys think? Should I be investing in something separate? Is chat the go-to? Is AIS the go-to? Do you guys hold any of these ETFs? Because I'm really curious. Although I'm not going to choose AIPI, even though it is the AI income producing ETF, I'm looking for a growth ETF for sure. Let me know your votes down in the comments. And don't forget to like and subscribe if you found this video useful. If you did, you're also going to like these that are popping up on your screen right now. So check those out and give me some feedback. Thank you guys so much for watching, and I hope you remember to spread some love today.